Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Good evening to all of you. I hope all of you are in the most in the healthy positions, or all of you in a good health. Okay, today I'm going to share with all of you is one technique that I use that is very interesting, but seldom I see people use this kind of technique. All right. Before that, there is a disclaimer. This is only not a buy call or a selling call or sell call, but this is only for the educational purposes. Okay. Before you go further, okay, this is I am. My name is Haji Zainal Arifin. I am Senior Vice President in the Inter-Pacific Securities. I am a certified technical analyst, MSTA, and also a member colleague of the IFTA, International Federation of Technical Analysts. I am also a full member of United Kingdom of the Technical Analysts, and also MATA, or Malaysian Association of Technical Analysts, and also I am also the principal for the MSTA program. So what's MSTA? MSTA basically is the professional qualification for the technical analysts. Just like, for example, like ACA. ACA is a professional for the accountants, but the MSTA is for professional technical analysts. Okay. I have experience in the market. I've been in the market for in the stock market for about more than 35 years. So my forte, or I'm expert in technical analysis. So that is what I'm going to share with you today. Okay, and congratulations to all of you. I believe that we are here since this morning. Now it's towards the end. I was supposed to speak, become the first speaker. Now I become the last speaker. It's okay, never mind. As long as I can speak. All right. Thank you very much to Bursa Malaysia. That is, to Bursa Malaysia that have this event and invite me to become a speaker. Okay. So today I'm going to talk about beyond the candlestick. I believe a lot of you are very familiar with the candlestick, especially if you use chart to trade. Okay. Okay. Before you do that, okay, let's see. Put it this way. You see, when I was invited to this program, you see, to give a talk to all of you, I was thinking, what kind of what kind of talk, or what kind of subject I want to share with this my fellow friends all here. You see. So I asked, you see, what kind of what you want me to talk about? You want it in the elementary or intermediate or advanced? Is it at the middle towards the advanced? Okay, what is it? Okay, never mind. Okay, so I choose this topic because it is available in most of the charts software, but very seldom is used. Usually, I receive the questions about this technique usually from my student who are going to sit for the exam of the MSTA. But very seldom my client asks me about this kind of topic. So that I'm going to share with you this topic, whereby it is very simple and it is very effective. All right. As you see, we are all, if you are all investors, also investors, or as a traders or traders in the stock market. You see, so what you're looking at is that we want to buy now and sell higher later. Whether you're using a fundamental, you're using a technical, we have the same aim. Okay. And the next question is that how are we going to know that we can sell it higher at the later time? Or how do we know that we say buy now and then the price will go higher later? You see, one of the or two of the most popular way or popular analysis is fundamental and technical. See, I just brief slightly only. Fundamental, between they look at the company, look at the economy, and look at the sectors, and look at the financial statement, look at their sales or their revenues or their dividend, all that. But technical analysis, they only look at the price and volume. This only two: price and volume. All right. Now, next, you see, what are we looking for? You see, so the question is, what are we looking for? You see, so even if you are a technical or you are a fundamental, basically we are looking at, one is trend, Second is the support and resistance. The third is the signal or the buy and sell signal. So there are three that we are looking at, especially if we are using the technical analysis. You're searching or you're looking for trend, support and resistance, and also the signal. So the one that or technique that I'm going to share with you today, they have all of these three. Okay, let's see how is it. Okay, one. Okay, this is just an introduction. Technical analysis is is study of historical price using the chart for forecasting the future price. So this they use a pattern and all that. So because we believe that the price quickly reflect all available fundamental of information into the price, and we believe that the history repeat by itself, and we believe that the price at that particular time will show that all the information is already in the price. Okay. And the role of the technical analyst is to identify or forecast the change of in direction of price trend and determine the timing of action. So what does it mean? Which means that you timing your entry or your exit in the trading. You see that is you have two things. One is price. Second is timing. So price and timing. In the technical analysis that we use price and timing. Okay. So the goal of the chart is that we are going to find a consistent, reliable and logical price pattern with the which predict future price movement. Okay. Let me okay, wait, because I can see my okay, next one. Okay. Type of charts. Okay, this is very usual that what you see. This is a type of chart. Just we call it. This is called line chart, and this is what we call a bar chart, and this is what we call a point and figure chart. Only the very rare or very seldom I see people using this what we call a point and figure chart. And also usually the old generation, they use point figure, and this is the oldest point of chart, the oldest, or we call what you say the oldest way, or the way of we are doing the chart. Also the oldest way that I use it since 1984, the last time, you see. But then all of this that I show you, all this here is available in most of the chart or most of the chart softwares. Yeah. Okay, this is the most popular one. The most popular, there is what we call Japanese candlestick. See, it's very popular. Actually, it is quite old. It's been used in Japan since 1600 or about in 17th centuries, but only came to US about in 1990. And come to Malaysia about in 90 after 1978, like that. Okay. Today I'm going to share with you. Okay, what we call is the topic is a beyond candlestick. All right. So this topic was written in this book. This is called The Beyond Candlestick by the Steve Nissen. It was written in 1984. So not so long ago, even though it's been used for quite a long time. Okay, let's see how are you going to use this simple technique to determine the three things that I mentioned just now. Okay, one. So there are three techniques I use. You can use only one. You can use all three. Which one is up to you? But I'm going to share with you all the three today. Okay, one is that KAGI, Renko, and also three line breaks. There are three types, three different ways, you see, and you can use any one of them. All right. Next one. Okay, KAGI. Okay, KAGI. The first one that I want to share with all of you is KAGI. Okay, so KAGI. Meaning is KAGI actually is a key or a key. KAGI means key in the Japanese, and it's been used as you see on the slide. That is around 18,000 in the 19th century. They used all of this KAGI. Okay. So this is how the KAGI looks like. Okay. How is the KAGI looks like? Okay. Is it available in the chart? Yes. Okay. Let me share with you where is it you can find the chart. Okay. For example, like okay, like this. Okay. This is how the KAGI this is in trading view KAGI. or you can also use, for example, like I'm from Inter-Pacific Securities, and in the even Inter-Pacific Securities, so they do have even not only Inter-Pacific Securities, all of the most of the screen or most of the screeners or all of the this chart that is available for this. You see, for example, like let me show you in here. That is because I just want to show you that it is free. You see, that is available freely. You can use it, but seldom or very few people that use this. Okay, for example, like this is KAGI, for example. Yes, this is KAGI. This is Renko. This is Renko. Okay, this is Renko, and this is line break. Okay, this line break. So you can see that is all is easily available. Okay. So the word KAGI come from old-fashioned key, the L shape, also called key chart by the Japanese, and the chart thickness and direction of KAGI lines depend on the market action. Okay, all right. So other name for KAGI is that include as a price range, the hook chart, the delta chart, and the string chart. So that is not important with the name of that. The most important is that how to use it. Okay. So the KAGI chart is used for tracking the movement and to make decision on the purchasing and also to sell, which means that this KAGI can give you a signal of to buy or to sell. Okay. And in the chart, you see, usually we always look at just now I mentioned about time and price. So there is another thing. That is what we call is a volume. You see, we can see that the price and volume. Usually you can see on the chart, you can see there's a price and volume. You see, but the KAGI, they didn't take into consideration of the volume, so they only show you the price action only. Okay. We can use closing price. Usually we use closing price, or a lot of modern software they use ATR, and there is a certain amount of reversal. You see? And also we can use this reversal is usually we use point, whether it's a 0.3. Usually the most common is 0.3 or 3, or we call 3 or 3 reversal, or we can use even a percentage too. Okay, but that is not important. Okay, now the most important is that I want to show to you that how to use this KAGI in trading. Okay. Okay, now in KAGI they have what we call yin and yang. Yin and yang. So the thick one, or we call in here, you can see there's a green one, we call it yang. The red one, we call it yin. You see, because in the old days there is no color. Actually, there's only whether they have a thick line or it's a thin line. So the thick line is yang, the thin line is yin. Okay, so there are a few types of yin and yang, because this yin and yang will tell you how strong is the market. How strong is the market? Okay, so if the yin or if the yang is longer, so which means that the market is strong. If the yin is longer, so market show the market is a weakness. Okay, that is one. Okay, so how to use it? Which means that you buy on yang, sell on yin. Okay, so buy on yang, sell on yin. So it's very simple. Okay, so there has what we call here, we call it, there's a waist and shoulder, which means at the bottom, or when they come down and it goes up again, we call it, or we call it peak and trough. In this in normal chart we call it peak and trough. In here we call it waist and shoulder. So it's the same basically. If you follow or you learn about charting, you see there is usually in the chart, yes, the same thing, but the name is already different. So you buy on yang, sell on yin. Okay, now this is how it looks like. Okay, so where that you buy and where do you sell? For example, okay, whenever there is change, the change in from red to green, that is a signal that for you to buy. When there's a changes, you can see that. All right, where it come down, is it come down? Does it come down? No, this is not a buying. Okay, okay, this is showing a buying, and this you can see that there's a come down, there's a selling. Okay, let's see. Okay, let me see the whether I can show here. All right, okay, this for example, like this is for example here. Okay, this is also a buying, or sorry, buying signal. Sorry. Buying signal is here, and All right, let's say pointer option. Okay, all right. So this is buying signal. Okay, you see the advantage of this KAGI is that they will tell you that every time the price move out or the price break out, you see, there will change color. See, so basically we use this KAGI chart to determine the breakout of to alert us of the breakout. You see, so you can see that a breakout or breakdown. So because in the stock market or in the trading, you see, there are only two ways for you to buy. One is breakout, second is reversal. You see, so this will tell you breakout and but not a reversal, but there's some or reversal, but usually they tell you it's the breakout. You see, for example, like in here, whereby there is come down, this is a reversal, but no, this is no signal, then there's a breakout, only there's a signal. Same thing also here, whereby you can see that there is a breakout and they will show you a signal. And here also, which means that they are sideways, is a breakout, and it's sideways, and there is a signal when there is a breakout, and also when there is a breakdown. So this is what I'm saying just earlier just now, is that I'm saying that every time, you know, when the price move, you see, when the price move higher, or the price move breakout, or price make a new high, so the color will change. So it's easier for you to see. It's much easier for you to see compared to some other types of charts. Okay. We go further. Okay. This is a buy on Yang, sell on Ying. Okay. The next one is alright. This one I already told you. Later I'll show you. Okay. Next one. Next one is that this is the variation of how to use this KAGI. So one of it is that multi-level break. So which means that, for example, that in here you can see that there is a multi-level. This is what we call a multi-level break. And also at the top here we call it also that is a multi-level break. You see. So what we say that how strong is the market, you know, that this KAGI also can tell you that market, whether the market is strong or not strong, or the breakout is strong or not strong, by using this multi break. But the most important actually is the one that is earlier. This is the most important, whereby that when they create a new one or there's a change in the color, that is the buy signal, and also that is a break the resistance or break the support. That is the most important thing, because what we're looking for in the stock market, we are looking at the trend, we are looking at the support, looking at resistance. So here that will tell you there is a support and resistance. Okay, this multi-level break. Okay, the next one is that the middle of the KAGI. This also will tell you or give you a indication of the whether this is very strong or it is not strong. Okay, so if the KAGI, you see, or the Yang, you see, that become become young, you see, and it is above the center, or like this kind of formation, so which means that it is a very strong. Let's see in the chart, is there any of this? Okay, it come down. Yes, this is the bigger one. You can see that this is, or it is here, that is like this. It is the same like the study of the chart in the western side, which is what we call it uptrend, when there is a formation of a higher low. See, so this is a formation of higher low. Okay, okay, this formation of higher low. Yes, you see, is this one, this low compared to this low. You see, compared to this low. You see that, as you can see that the formation is creating a higher low. So this is what we call a uptrend. So as you can see that this KAGI will tell you the trend, support and resistance, and also signal. Okay. So that is how the beauty of this. And but as I said earlier, there's a lot of people didn't use this, but now we can try to use it, and it is very simple and it's very effective, especially if you are trade for the medium term, not for the short term. Short term, yes, can, but then you just change the time frame. It will be lower or lower time frame. Okay, the most unique pattern in this KAGI is a three Buddha pattern. See, three Buddha pattern, or in the other or chart pattern, actually we call it head and shoulder. Okay. And it is a reversal pattern. Whenever you see this kind of reversal pattern, it will tell you that the market is going to reverse. Either it is whether it's at the top or at the bottom. For example, like this. This is what we call a three Buddha pattern. You see, this is one here. You see this one here, and this is another one here. You see, and this is another one. You see, so this is showing that they are what we call a three Buddha pattern. It is a very powerful reversal pattern. Either it's from the top, or if in the western side or using some other chart pattern, we call it inverse head and shoulders. Or in here, we call it a three Buddha pattern, or at the top, we call it either is head and shoulder or inverse head and shoulders. Okay, that is KAGI. Okay, next one is Renko. Okay, Renko is we call it also term neri or zigzag or whatever it is. Neri, training, or zigzag. Sometimes they call it neri, but usually we call it Renko. And the reversal is that decided by predetermined, which means that we decide what is the reversal size. If you are looking for the long term, which means that the reversal size will be smaller. If you are a longer term, the reversal size will be bigger. So it depends whether you are the short term or you are the long term. So it depends. All right. Now, it just looks like a series of a black and white block. Previously, there's white and black, but now because of the computer, we have easy for us to color and all that. So usually we use red and green. Okay, red and green. So each block is called bricks. So they believe that Renko may come from the word renga, in which Japanese are saying that word means brick. Okay. So usually we use is a closing price, and new line is added if the fixed amount is exceeded. Okay. While white price is increased, black is decreased. So it's a black and white. So this is how to what we call how to construct this thing. Okay. And the change all you need. Okay, never mind. I think I will skip this because this is how to what we call how to construct the chart. Yeah. The most important, or what I say is the one that is more important, is that how to use it. Yeah, how to use it. Okay. Let's say, yes, this is how it looks like. This is a Renko. You see, this is a Renko. Okay, Renko, and you look at it. Well, there is a red bricks and also a green bricks. You see, what does it mean? You see, so basically it's very simple. The the red bricks show you or tell you that the trend is going down. When there is green, which means that the trend is going up. It's very simple. Okay. So how to use it? See, is that you use it is very simple. Is that buy when white brick appear or the green brick appear, sell when the black brick or the red brick appear. Okay. Black is down, white is up, green is up, red is down. It's the same thing. The only thing that in here we use color, so for us easier for us to see as a visualize. Previously, this is a black color. See, it's black. Okay. So if you can see that this Renko, you see that's Renko. That is very simple. Or in the western side, we use parabolic saw. Is very similar concept that we use a parabolic saw. So which means that to determine whether it is a uptrend or it is a downtrend. Okay. So in here also is the same. So which means that we use this Renko to determine whether it is uptrend or is a downtrend. Let's say, for example, let's say that you purchase or after this it come down and then there's a one come out here. So there's a buy signal here. You see there's a buy signal here. You see there's a buy signal here. Can you buy? So what to do? As long as there is no red bricks, usually we use the first brick, and then if exceed the first red brick, only that we sell. As long as the brick is keep on green, we just hold it until it change or until it reverse. See, so which means that let's say for example that you buy here and then it's a red bricks come out, okay, you sell, and then you buy again because it's a green bricks, and you it's a and sell again and buy some more, and you sell some more. See, that is how to use this Renko. So basically, I told you earlier for us in the start of session, that is this Renko will tell you the trend. What is the trend now? See, so because that is what you're looking for, isn't it? Basically, in the stock market or in the trading, basically, if you know what you're looking for, it is very easy and it's very simple. You see? But then the problem is that we tend to use a lot of things and you end up you don't know what you're using for. You see? But if you know how to use it, or you know what to use, or you know what you're looking for, it's very much easier. So one of the usage or the most important uses of the Renko is that to use it is as a trend, or which means that one is a trend, which means the direction of or direction which is a trend, whether it's a uptrend or it's a downtrend, and also a signal. So a signal. Remember, trend, support and resistance, and a signal. Okay. Next one. Okay. The next one is a three-line break. You see, three-line break is more like a point and figure chart. Remember that I showed you just now. There's a point and figure chart. It's a very similar to like a point and figure chart. Okay. And the reversal are decided by the market, not by the rules, and it is a series of a series of the series of a black and white block which varying height, and we call it each block is we call it line. Okay, we call line. Okay. Let me see. We can use okay. We show you some example rather than if you look at you show some example. So much easier or better than this. Okay, let's see. Okay, I believe you can look at my screen. Okay, this is okay, this is this one is this is KAGI. Okay, this KAGI. Okay, let's see, you change it to Renko first. Okay, Renko. Okay, we can change it here. Actually, we can change it here to the setting of the symbol. Because this is this is price line setting ATR 14 line. Okay, all right. Maybe if I put it in the lower time frame, we can see it's clearer. Okay, so this is how to use this Renko. No, this is yes, this is Renko. Okay, this Renko, and this is okay. Now we go on line break. Okay, this is go on line break. So before we go here, okay, let me finish this line break first. So after that only we can see the chart and all that. All right. Okay, next one. This one. All right. So we use a closing price. So new line added if a price is exceeded. What is increased? Okay. Next one is the price line. Okay. So another type. Okay. The other name for this three line break chart is include the 3-step new prices, a new price 3-line break, surpassing 3-line, the 3-line turnaround method, and new price 3-step bar. So these are all the name of all the names of this all of this 3-line. Okay. Next one. Okay, let's see. Okay. A 3 successive line confirm a trend. The price need to break the low of the last 3 line before it opposite is drawn. Okay, and okay, this is how to read, because this one is slightly different. See? The price will move up or we draw it whenever there is a move up. When the price change, we move up. Okay, only that we draw the black line when there is it exceed a 3-line. That's what we call 3-line break. So which means that it goes up and then when the price drop below the tree line, previous tree line, only that we draw the black line. Okay, so that's what they call it a tree line break. Okay, so this is how to draw. I think I just keep this one. Okay, today baseline. Okay, then drawing the second line, compare this low, all right, and shift. All right, this is for example how to use it. Previous high, this is the first day. For example, this is the first day. This is the first day. Okay, and if a second day the price goes higher, and then we draw the new bricks. Okay, the same thing also if it goes down. If it goes down and then the prices come down, and then the goes lower, and then we do the second break. We shift to the right, and then we draw a new one. Okay, now the next one, the second line, that is let's say now with the second line break the previous three, and only that we draw there is a new high, only that we draw the white or the white break. Or for example like this, if there is a still new high, then we don't draw. Oh sorry, we draw a new one, or what we call it, there is no reversal. Okay, the main purpose of this tree line is to tell us, or to tell the user, that there is a reversal. So the purpose here, there is a reversal. So because that is what we're looking for. We are looking for the trend, a stop and support and resistance, or and also the support and resistance, and also the signal. So this gives you a signal, and also just I said earlier, whereby that when you buy, that is either is a breakout or it is a reversal. So here that we show you as a reversal. Okay. All right. No, I will just skip all of this. Okay, now this is how this looks like. This is how it looks like. The what we call this three line break. Okay, how to let's see. Zap. Okay, let's see now. I want to see. Okay, now the three line break. Okay, so in three line break, you see, one is that the trend. Okay, when there is an alternative of the red and green, you see, or black and white, red and green, you see, that is we call is a trendless. You see, so it is that in the trendless session, it's very difficult for us to make money because we can determine whether price is going up or is going down. See, but then the if the price is trending, so it's much easier for us to make money, or for us to buy and to sell stock and make money. Okay, trend confirmation. Okay, how to determine the trend confirmation? Okay, the trend confirmation is that when there are three consecutive white or black line appear, or the trend reversal when the turnaround line appear. Okay, how is it? Okay, now let's say now, okay, trendless. Is there any trendless side here? Trendless. Not really. This one is just no. Okay, trend confirmation. So trend confirmation which means that they show three consecutive white line appear. For example, like this, there is a 1, 2, 3, and this is all, which means that they the price change, and it exceed the three previous brick and create another brick. There's 1, 2, 1 here, 1 here, 1, 2, and also here 3. So that is what we call a uptrend. The downtrend is the other way around. For example, like this, 1, 2, 3 here. You see in here there is this is a downtrend. Here also the same thing also. It's 1, so 2, and 3. So we know that there is a downtrend. Okay. The reversal is that when there is the first change, that is what we call a reversal. For example, like here, this is a reversal. Okay, this is a reversal. These are also a reversal. You see, and this is also a reversal. Okay, so this one. So there is one. Okay. Now the next one. How to use this three line break in trading. Okay. One is that buy when the green line appear. For example, like here, the price come down. You see, as you can see here. See the price come down. You see the price all the way down. You see, and there is a new green brick appear. So that will tell you that is a reversal. See? Because that's what we're looking for. You see, we are looking at either it is a breakout or a reversal. So that is why this technique, or this using this, which is free, is you can easily to determine on the reversal of a certain stop. Okay, so this is a reversal. Same thing also is here, but unfortunately, ladies and gentlemen, actually this one is a failure. We call it failure here. Sorry, this one is a failure. Failure, which means what? Which means that it shows here that the price changed, but it didn't change. Which means it's supposed to be bearish, but instead of bearish, it reversed and become bullish. This on this one. Okay, next one. Let's say what else? Okay, okay. For example, all right, this one. Okay, this is also we call reversal. You see, reversal, and this is where that you sell. Okay, this is so this you sell. Okay, so there are two basic usage of here, or you can have three also. Trend, they give you a reversal and also a signal, buy and sell signal. Okay, and usually you have to wait for this brick to complete first. Okay, this is how to use it. Okay, now the next one. Okay, we go for the next one. All right, so the confirmation, you see, for example, the confirmation, you have to wait. For example, let's say now the market come down, you see the price come down. Okay, and then there is appear one brick here, for example. You have to wait for the next brick only, that to confirm that there is a change of trend. See, for example, this is the confirmation. See, this is a confirmation candle, or this is a confirmation bricks that show or that tell you that it is already change of trend. Okay. Okay, this one, okay, the same thing is yes, this change of trend. So, and the only disadvantage of this technique is that you have to wait it of the between the risk and reward ratio, because if you wait for too long, your reward is getting smaller. See, but if it's too fast or you act too early, which means your risk is higher. So you have to compensate between these two. Okay. One of the best technique, or one of the most something that is very special to this technique, is what we call black shoe, white suit, and a neck. This is a very special to this three line break. You see, a black shoe, white suit, and a neck. If in KAGI, we call it three Buddha. So that is the one that is a reversal. This is also a reversal pattern. White shoe, white suit, and a neck, or black shoe, or black shoe. Black shoe. Okay, we go one by one first. Okay, right. Black shoe, white suit, and a neck. So why is it? How does it like? It's like this. Okay. So when market come down, as I said earlier, it is a reversal pattern. Okay. So market come down, market is on the way down like this. So it's down. You see, as you can see, it's down, and the last break is small. That's why we call it shoe. The next one, reversal, it is a white, or we call it which market is a reversal, because this reversal, you see that exceed more than 3 previous break. So that's why there's a reversal. Second, the third one is that there is another one, or it is a smaller break that is formed after the long break. This is why we call it black shoe, white suit, and a neck. This is a very powerful buy signal. Sell signal is the other way around. White collar or white neck, black suit, and also a black shoe. See? This is how it looks like. White neck, is it black suit, and also the black shoe. So this is a very powerful reversal signal, or we call that is a change of trend. Okay. Let's see in the chart. Okay, I just pick up randomly. It was a chart, whatever. It's still the same thing. Okay, This is how it looks like. Okay, this is what we call a, as you see the price is going down, you see the price is going down, and this is a black shoe, white suit, and also a neck. As you can see, after that all the price all the way up, see. And in here also, okay, in here also there is a white white neck, and let's see another one. All right, this here, white neck, black suit, and also a black shoe. See? So and the price come down all the way. So this is a very powerful pattern, or this is very powerful pattern that is will show you the reversal. Okay, I want to show you the what we call the real example. Let me see whether I can see the pack online. Okay, let's see this one. Okay, I want to take the more expensive counter. Let's say we take okay, we put on daily. Oh, no, it is too long, too long, or too, okay, all right. Okay, as you can see, okay, can you see the, yeah, for example, okay, let's say for example in here, okay, let's see, I want to go for here some, or no, okay, here, all right, here, okay, the price come down, let's say the price come down here, where is my brush? Okay, the price come down here, come down, see, and there is a black shoe, white suit, and a white knight. So this is a reversal. I can see after that it just move up all the way. See, same thing also is here, whereby there is a white knight, black suit, and also the black shoe. And you can see after that the price all the way down. Of course, you can change all of this. You can change the the time frame and all that. You can change all that, the time frame. Okay, so that is the what's this? This is a 3-line break. Okay, let's say we change to the one that we learned just now. What we call the first one is the KAGI. Okay, KAGI. Okay, let's KAGI. All right, so this is KAGI. All right, let me clear it first. Okay, let me show you slowly. No. Okay. Okay, all right. This is how the KAGIs looks like. If you have a trading view, you can use this as trading view. From you, what you can use is this is the how to change the KAGI. In here there's a KAGI here. The most important, how to read the KAGI, that when there is a change from the green into red, which means that it tell you there is a support and or what we call is break the support or break the resistance. For example, like here when the price goes up and it come down, and then this it tell you that they break the resistance. It break the resistance and it goes up. Okay, it goes up, break resistance. And here when it's become red, it tell you that it break the support. So yes, you can use, perhaps you can, for example, let's say now you can use candle, for example. Okay, you can use candle, you see. But then when you use candle, is sometimes is a bit we cannot see very clearly where is the direction of the market. Okay, but by using this KAGI, you see that you can see clearly or much clearer of the direction of the market, and also the support and the resistance. It depends on what we are looking for. If are we looking for a trend, or we are looking for support and resistance. So if you are a trader that use a lot of support and resistance to trade, this is a good indicator or a good tools that you can use to buy and to sell, or to give you a signal of to buy and to sell. And this is very powerful. Okay, so whenever there's a change, you just wait for the thing to change from red to green, there's a buy signal, and then from this green to red, there's a sell signal. But of course, see, of course, you must have your own trading plan, which means that you have to establish what is your price, your timing, your time frame, your stop loss, you see, and your betting size. With all of this, you must have what we call a trading plan. You see, you must have a trading plan. This is only a tools that for you to use to make a decision to buy or to sell, because the most important is trading plan. Okay, but this is good because it tell you whether it is going down or it is going up. Okay, this is a KAGI. Okay, now let's say another one. Just now we look at instead of KAGI, we look at Renko. Okay, Renko. Okay, Renko is used for the trend. You see, for the trend. So when you use the Renko, as you can see that if there's a change straight away, you can look at, or you can detect there's a change in the Renko. See, I'm using of 4 hours. As you can see that even if whether it is a short term or the long term, it can be used. Whether it's short term or long term, it can be used. For example, like here, they tell you that which means that the price is going down. It's a change in the price is going down, and once it's changed from red to green, that is the time for you to buy. Okay, there's a false signal here. Okay, after that it goes up again, but overall you can see very clearly that this technique will tell you what is the position or what is the trend at that particular time, whether the market trend is going up or market trend is going down. Okay, the next one, okay, next there is a Renko. Okay, another one just now is Renko, rank break, 3-line break. Okay, 3-line break. Okay, 3-line break. Okay, this is okay. I showed you earlier. Okay, let's say some other counters. We look at tenaga nasional. Okay, this is I show you 4 hours because it is have a more data. If it's sometime just 1 day data is sometimes not enough. Okay, let's say now it's not 1 day data. Okay, let's see, make it bigger so that you can see clearer. All right. Okay, there you can see a lot of this is a white knight, black suit and black shoe, even though the shoe is very big, you see, but it's still the same. You see, it goes down. It's same thing also, and it goes up. Black shoe, white suit, and also the white knight. Yeah. So all of these you can use for this technique. There are so many ways, or there are so many for you to use, and it is a very what we call very useful. Sometimes you can't see in the candle or in the candlestick chart, but you can see it much clearer in this kind of charts. Okay, so I have another 15 minutes or 10 minutes. All right, 10 minutes. Okay, 10 minutes. Perhaps I can if you have any question, maybe I can answer you some question. Let's see. Where is the question? All right. Okay, I can now consider the question. Okay. All right. The question is that the KAGI 3-line break can be used for FCPO and other fast moving securities. Yes, the answer is yes. As long as the data or there is continuous market, you can use all of these three. You can use KAGI, Renko, you can, as long as it is a continuous market. Continuous means which means that all the instrument, for example, like securities, FCPOs, or the derivatives and all that, you can use. You can use any other thing. In fact, you should the original usage. You see, the original usage of this technique actually is they are use it in the futures market, because in Japan the first futures market is in Japan. So they use this to track the price of rice that time in Osaka. And one of the I think one of the oldest futures market in the world is in Japan, basically. So they use this technique to determine or to forecast the price. So they use this technique beside this candlestick, because a lot of people are saying, oh, use only candlestick. Actually, they are instead just not only candlestick, they use this KAGI, Renko, and also three line breaks. Okay. How to use the chart you just shared to tell the support and resistance level. Okay, there are a few chart that you can use support resistance. Actually, KAGI is very good to tell you the support and the resistance. Meaning that if you change color, from green into red, which means that it break the support. When it change from red to green, so it tell you that is a break the resistance. So that is very what we call is simple or very easy for us to use. Of course, I'm very sure most of you are very familiar with this candlestick or the bar chart or line chart or mountain chart and all that. But this is one of the way that we can use, or because it's free, it's available. Very few people use it. Maybe you can use it. It's slightly different from other people, or it is much easier for you to use it, much easier for you to clearer the trend of the market, the support and the resistance, and also the signal. Okay, next one. What is the best free chart tool that is FOC can be used for investors? All right, most of the brokers or most the investment bank or brokers or participating organization that in your platform, they do have the chart software. Inside that chart software, they have this KAGI, Renko, and also Candlestick. Most of the software they do have. In Inter-Pacific, we are using end-to-end. They have the chart. Let me share you this one. Okay, let me show you on this Inter-Pacific platform. Okay, this is Inter-Pacific platform. Okay, let's say you just pick any country will do, and we change it into analysis chart, and there's an arrow here. You just click the arrow here, this come out, there's a menu here, and you just change it to Renko. So there's a Renko there. Okay. So it's free. You change it to line break. Okay. This is a line break, and if you want to change it to KAGI, okay, this is KAGI. So you can see this is all you can change the height and all that lah. Okay, so basically it is free. You can see it's what we call is is free, or it is available, very easily available. Okay, this KAGI, Renko, and let's say there's a Renko, and then you can change the record, how many record you want to see, whether it's a 100 or 200, or whether it's how big is it. And you can see they have a volume here, but it's no volume. All of this basically just a price only. Right, next one. Okay, next question. All right, next question. Okay, right, okay. So to Haji, okay, your share is very good share. Can I use it now to trade? My question is, if the shoe is thicker than the suit and the neck, is it mean it is a weak reversal trend? Okay, good question. Okay, let's say now for okay, let's say we look at the real example. Okay, you see, if the shoe is thicker than the suit and the neck, see, it might be a fall, a signal, or it is a bit too fast. It's a bit too fast. So in the charting, or what we call in the charting technique, you see that we have to wait the formation. When there is no formation, don't try to look at it and try to imagine. Find the what we call is find the pattern: black shoe, white suit, and white neck, for example. Okay, For example, like let me see in here. Got any? Okay, all right. Here, as you can see, this is a white neck. This is a black suit, and this is a black shoe. You can see how to determine it, or how going to read it. The neck must be shorter. It means this way. Actually, the name is not really important. That's what does it mean is this way. The first break is small. The second break is long, and the third break is small. That which tell you that the price is going to change or is going down all the way. See, so that's how to use it. For example, like this. Okay, in this set. All right. For example, like here. Okay, in here, for example. Okay. Not really good. No, this is not really good. Yes, this one can. This one. Black shoe, white suit, and also white neck. White neck. You see, white neck. So if it tell you that one is small, the first one is small, it's called shoe. The second one is big, they call it suit, and the third one is neck. This is small. So that is how that you know how do you use it. So if you can't find it, don't look for it. You look at it, just look at it once. Okay, yes, there is a formation there. Then you know this is going to change because this is a very powerful reversal pattern. Okay, and okay, next one. Okay, may I know what is the most effective time frame to be used for KAGI and Renko? 1 day, 30, 50. No, yeah. It depends. If you are a short-term trader or you are a long-term trader. Okay, but usually we use is 1 day. 1 day, which means that we use a closing date, which means that we use 1 day and closing price. That is what we use. Usually, that is what we use. Okay. Because in the stock market or in this technical analysis, that what you're looking for is that when there is a formation, only that we identify. It's not that we try to find that kind of the what we call the formation or the pattern. Okay. Okay, there is I think there is all right. Okay, sorry. I got there is a question somewhere here. All right, all right. Okay, what is the recommended other indicator as a MACD that work well with KAGI, Renko? Yes, or we can use all of this also, but sometimes it's not very what we call is not very effective. Usually, what I add on all of this is that the volume. You see, the volume. Usually at this, let me show you. Okay, volume. Volume. Okay, all right. This volume. That is my indicator, my template. No, not this one. No, not this one. Where is it? I can't find my AVR. ATR, monthly high, and smart money, combo, Bollinger Band, ABCD, PA study. No, I can't find it here because okay, we use it or we add on the volume because there's no volume, so that we know that is which level that there is high volume, so that usually we use that. Can we use the KAGI or we can use the other indicators? The answer is yes, but then not very effective. Usually I use this only looking at the changes in price. This is no, this you don't need to use all this MA. Some people they use it. Some people also they use the MA to for combine with all of this. Yes, they do use this one. Okay. All right. Next one. Last question. All right. Among the three, which is the better one for indices day trading? You have to try actually. I'm not very sure, but you have to try for that. Okay, I'm not very sure about which one is the best. You see, because all the three is using all a different way of using it. Okay, I think that's all the question. Yes, that's right. You can't find it, don't look for it. Yes, that's right. You see. Okay, is there any question? A last question? Yes, all right. Okay, thank you very much to all of you. Congratulations that you stay till the end of the program. We have another session after this. And I want all of you to be healthy and safe from COVID. Thank you very much. And we see you again, or I see you all of you again in some other sharing session. Okay, thank you, thank you.